Let's create a budget. Let's get out of debt. Let's build wealth. Guys, welcome back to the channel. I just wanted to continue on with the infinite and velocity banking. And I just feel with the infinite banking part that I wanted to do one more video to go a little bit more in depth in it. I know when I was first looking at the infinite banking concept, there wasn't a lot of videos that I found that really helped me to understand it or helped me to know if this is something that I wanted to do, how well or effective was it really, and was it really worth it? So I wanted to make a video for anybody out there looking for more information on the infinite banking concept. So when I was researching it, right, I opened the policy. I've had the policy for about 8 months. So I have what I know, what I've been through, the actual results of what I've done so far. And then I have what I've researched and what I think from my research, what it's going to turn out to be. So I'll start with what I know. So when I first started looking into the infinite banking and I wanted to find more information on it, I had no idea exactly really what I was doing. I just went to the internet. I called some insurance places and I was like, hey, the infinite banking, most of the insurance people, they didn't even know what I was talking about. But at the time, I didn't even know really of Nelson Nash's website. There is a website, the Nelson Nash Institute. Nelson Nash was the founder of the infinite banking concept. He came up with the idea of using a whole dividend paying life insurance to mimic what a bank does, or in essence, become your own banker. And at the time, I didn't know that. So I finally, I just kept kind of Googling it, and I found a local person who did the infinite banking concept. And the local guy, he was a bit older in age, and his receptionist, she was a bit older. And I sat in his office, and he brought me in. He kind of explained infinite banking, and I just kind of just started bawling, just started crying. I spent 3 hours with this man, and he explained how the banking system worked. He explained that the reason I seem to be going nowhere is because money isn't really real. Once money was taken off the gold standard, it is basically just digits. See, there was a law or something passed to where for every dollar you put into the banking system, they can loan out 10 times that amount. And I was like, what? So where did they get the money from? And he's like, just thin air. It's not real. So you go into the bank, you put $1,000, you deposit $1,000 into that checking account. They're going to turn around and loan 10,000 out. And it was a real interesting conversation. And like I said, it lasted for 3 hours. He told me about a lot of things. He told me about infinite banking. I wasn't well educated on infinite banking at the time. I was still trying to learn, and I was a bit confused because my premium was going to end up being $10,000. And he said that it was near the holidays. So he said, once the holidays is over, we'll go over it. And during those holidays is when I found the guys at IBC Global, and I started learning about policy design and the way that it worked. And I was like, wait a second, I didn't understand at that time that the PUA rider was the cash value. See, a lot of people don't understand, because a premium, you pay your premium, and that premium over time will generate, cash for you. But by adding the term rider and those paid up additions to that policy, you can instantly have cash available that you put into that PUA. And I was like, so, okay, so if I could put 10 times my premium, I don't really need a $10,000 premium. And, as I was learning from the guys at IBC Global, I would text, the older gentleman, and I would say, hey, what insurance company are you using? And he seemed to get irritated, and when I went back to talk to him, he was kind of upset or irritated, but he explained like how, I don't think he was really aware of policy design. And that's why I try to tell people, just because they're on, and but that's when I found out about the book, Becoming Your Own Banker. That's when I found out about the website. I checked the website. He was on the website, as well as the guys at IBC Global. So I was questioning him, and he just seemed to get frustrated. And that's where I say that insurance agents can put in extra work for you, because he said he had one case where the health of a lady wasn't real great, and he had to do a lot of work. And that's where I come up with, they do a lot of work behind the scenes if your health isn't the greatest, to help ensure that you get that policy. And so the more I talked to him, the more irritated he got. And I get it, I think it was just, he was older in age. He didn't want to deal with it. He got irritated a little bit easier. And when I say older in age, he was in his 70s. So, he just, they were great people. But the way they, the more and more I was blessed to be able to have that time over the holidays to find out about policy design, and that's how I started understanding the concept that, first and foremost, this is just a concept. It was never built or made to be a bank. That was Nelson's imagination. That was his creative thinking, and knowing how a banking system worked, that you could mimic what they were doing through a policy like this. So I told them, I'm like, hey, I don't think this is for me right now, and I'm going to explore and learn more about this. And so I started to learn and ask more and more questions, and I found it I was very surprised how open and how much questions I could ask the guys at IBC Global, and how patient they were with explaining and understanding it. And the more and more I started to do my research, it was, it is, we say you can have a $5,000 premium, you're allowed to put 10 times that premium into cash or PUA rider and premium. Well, I still didn't fully understand it, but the more and more I learned, and I watched a lot of videos from IBC Global. That's how I became more and more knowledgeable. And of course, I knew, because when you're going into asking about something, you only know what to ask on your knowledge of it. So if you don't have knowledge of it, you don't really know what questions to ask. So the more and more I learned it, I would ask questions, I would review, I would ask questions, I would review. So I titled this The Known and Unknown, or The Known and Research. I know, so from what I know is, once you get a policy, I know for a fact you can set that premium at whatever amount you want. So that part of it is known. If you set a $500 premium, you will in fact be able to put $5,000 into your policy, the premium and PUA. So if you have a $500 premium, you could put $4,500 into PUA. But the way it works, and this is research, I guess it's research and part of known, is the premium buys you a death benefit. The death benefit has a direct relation to the MEC limit. The MEC limit is what you have to keep the whole thing together to make the banking part of this work. Without the MEC limit is a modified endowment contract, which basically controls whether or not it's taxable. It's a part of that tax-free growth. So the problem is if you have, so let's say that $500 buys, and these numbers are purely made up, but let's say that $500 buys, $50,000 worth of life insurance. Then that life insurance, that 50,000 is saying you can have a MEC limit of $1,000, right? So in order to increase that MEC limit to get to the point where you want 5,000, 10 times your premium, you need more death benefit. And this is where policy design and all those things come into place. So, and Nelson knew this, and it's not so much, this policy design is more of an agent that could, constantly test this out and test these theories out. So you would have to add that PUA rider. Adding that PUA rider to the policy ups the death benefit, say to 75,000 or 100,000, which then now raises your MEC up to 5,000, so you can actually put in more cash. Without doing that, you wouldn't be able to. And I don't want to get too much into all of that. Now, to stay on track, let me just basically say what I know. So if you say you want the ability to put 5,000 a year in, your premium is 500, which is 10 times 500 is 5,000, but you will have a charge for a PUA rider, which is usually about, just from guessing, I'm going to say for every 1,000 premium you have, it's going to be, maybe like $75. And that's just a guess. I mean, if you have a $5,000 premium, you'll probably have, I don't know, a $2,500 or $250 PUA charge. So it's going to actually cost you $5,250 instead of $5,000. Also, I didn't really know this at first, but I guess there's like a health rating. Your health rating will affect the performance of your policy. The thing is, basically, when you're trying to find out whether or not this works, or as some people would say, is it a scam or not? Basically, you're gonna have cash value in your policy. I mean, anybody would say that. You're gonna have cash value. You're gonna pay a premium. That premium you can literally set for however many years you want, and then you can stop paying it. You don't have to pay it anymore. The thing is, the amount that you have in cash value, the PUA rider, and the amount you have in premium, they gain a guarantee rate and a dividend. That guarantee rate and dividend, depending on how much you put in there, is going to eventually be more than what you put in there. So you got to understand that the reason I wanted to make this, is the reason I wanted to try to explain this part of it, is so that people understand that you put, the 4% guarantee, that's research. The dividend, that's research. I haven't actually seen that yet. What's going to happen is the $500 the money that you put in the cash value, you're not going to get any dividends or interest on it that first year. So basically, if you have a $500 premium, you'll pay a $250 in the PUA. So basically, you're going to pay $750, $500 with the premium. So your cash value is going to be $4,500. That $4,500 is going to sit there. So what's going to happen is, when you call and you say, hey, I want a premium. See, the whole point in this is the foundation. This is going to be, I mean, I'm only doing this up front so people don't expect, some lucrative whatever. This is basically long term. This, to know the fact that one day this is going to produce income regardless of what you do. It's going to produce income more than what you put into it. It's just, with these policies, the first 2 years is usually, after that is when you're going to start generating a lot more income. It's going to become more lucrative, but we're not worried about that. We're just setting this as a foundation for building wealth. But I want people to be able to understand that that 4,500 is kind of just going to sit there that first year. I mean, you could take it out. I mean, that's the whole point in creating this, that if you have an emergency or something, you're going to take it out and you're going to put it back in. Another thing is that, it's your what they call break even year is basically that year in which the total amount that you put in there, premium, PUA, cash, the total amount you put in there becomes equal to or more than the value that you have in there. That's your break even year, which that is based off of the premium, is based off of the interest and the guarantee rate that you're getting. But you can understand that this can become way more lucrative by, once you have that 4,500 in there, you could take that 4,500 out as a loan. And it is true, you could take it out as much as you want, however many times you want. But if you took that out and say you gained 12% outside of the policy, and then you paid yourself back, because it's calculated at a simple interest, you could technically break even earlier than what's projected or given to you. So, guys, I don't want to confuse people. Basically, I just want people to understand that this is just the vehicle in which we're going to be using to make sure, because every time you try to start something, and people know this better than anyone, every time you try to start something happens. And our goal is never to get off of this constant velocity that we're going to be doing and building wealth by having to liquidate, funds through real estate or whatever vehicle we're using to create wealth, that we can keep this flow going. So basically what happens, you'll get a questionnaire, they'll run medical on you, you'll fill out a medical form, you'll submit it, your agents will submit that to the insurance company. The insurance company would then send a nurse to your house. You can choose whenever you want them to show up. You tell them when you're available, or you can stop into a clinic. They'll test your blood. They'll run, they check your family history. Obviously the insurance companies are on the hook for a ton of money here. They're paying out these death benefits, and they know what they're doing. They've done their research. They know how to predict the mortality rates and all of that. So they'll run the tests, and then once you get it back, once you turn that in, it takes it could take up to like a week or so, and then the agent will let you know that you've basically been approved. You'll get a email that you'll sign into to pay your premium. So in this case, you'll pay that $500 premium. That's it. That's all you can do. And then once the premium is paid, within a day or two, your bank is open. From that point on, you have your bank, you have your foundation set up. You can deposit money at your leisure, depending on the insurance company. Each insurance company are different. So it's just a lot to get into. I just wanted to make sure that people understand. And when I was looking, I didn't, I knew for a fact for myself, that it does work and what I expect from it from the future. But I just wanted to let people know in the beginning, because it did kind of catch me off guard that I had, I know I seen it in the videos, and I understood that there was going to be a PUA, but in my mind, I was thinking, okay, I paid $500, I put $5,000 in, we're done. But it wasn't, technically it was simple, but there was that PUA attached, and then there was, the $5,000 included the premium. So other than that, I mean, it worked out pretty well for me. So guys, this was a long video. I hopefully it got, if you have questions, leave it in the comments below, and then I can answer questions as you go, because I don't know if this was confusing, if it helped any or not, but I just wanted people to understand that the foundation will be there. And I guess in a way, you're going to basically think of it as you're buying the right to have a tax-free account that's liquid as a checking account that you can put money in, and it has a death benefit for your future generations. So, if you have questions, individual questions, put them in the comments, and I can address those questions one at a time instead of trying to explain this. But I just want people to understand what the foundation is for all of this. So thank you for watching. I'll see you in the next video.